Hey guys, this is Rishi. This is my recap for Thursday, January 23rd. I traded one stock today. It was WDC. WDC was on the BBT Gapper scanner this morning. So I looked to see what the news was on it, and I saw that there was an analyst upgrade at Morgan Stanley with the price target raised from 64 to 88. So I saw that there's a good catalyst. Next thing I do after I check the news on a stock that gets gapping up on high relative volume in the pre-market is I'll look at the daily chart. And in this case, I saw that the stock was had a really interesting daily chart. So from about the beginning of December until now, for the past month and a half, it had been in a clear uptrend. Let me fix this. It had been a clear uptrend, and then before hitting this period of consolidation here. Over the past week or so between 65.95 and 70.50. Um, and then with today's gap up in the pre-market, it had broken out of this range, trading above 70.50. The other thing about the daily chart that was really interesting, and you have to go back to, let me actually even switch this to the weekly. So you have to go back to mid 2018 to find the last time that this stock traded in this price range. So there's nothing in 2019, and nothing for the last year and a half. No potential support or resistance more recently, which made this kind of interesting as well. So so after looking at that and realizing, okay, this has an interesting daily chart, has good fundamental news catalyst. The next thing I look at is a pre-market price action. Here I want to see. I know that's trading on a high relative volume. I just want to see a relatively even distribution of volume throughout the pre-market, which is the case here. And then also, clean pre-market price action. In this case, the pre-market price action was a little subpar. Ideally, I want to see a stock, clearly trending in the pre-market, clearly respecting moving averages and also trading on one side throughout the pre-market of VWAP. Here you can see on the 5-minute chart that the price action was trading for the first couple of hours of the pre-market is trading above VWAP, but then for the last for the rest of the pre-market, for the most part, it was trading below VWAP, and then in fact on the 5-minute chart started to lose these moving averages, the 9 and the 20 EMA on the 5-minute chart. What was really interesting about the pre-market chart also is we can see, so it gapped up as high as 71.25, and then twice during the pre-market, we had to the penny, the price tested this 70.50 level, which again comes from here. This is the top of the consolidation, 70.50, top of the daily consolidation. So twice tested this, and then at the open, this is the open price right here, open just below it. So we're, so now we have an open very close to this price, and in fact, it lost it right at the open. I wanted to see what this price or how it would react to this level, which is clearly a very strong level. Right away, within literally a matter of seconds, the price dropped from this open price of 70.36 all the way down to the previous close, and then bounced very hard off the previous close all the way back and above 70.50. And this happened literally in probably 20 seconds, but maybe not even that. If I go back and look at the tape, maybe it happened in 10 seconds or something. It's very, very quick. My first thought here is, okay, so it lost this level. Anybody who took this short when they saw that this broke, when this came back up above 70.50, is going to get squeezed. The longer this price holds above 70.50, the more pressure is on short sellers to abandon their short positions, which was the case here. So all within the first minute, the price dropped down to previous close, 68.66, something like that. Jumps all the way back up above 70.50, and now it's just holding above 70.50, and you can see with the last price marker too that couldn't break the 70.50 level, and then it's just kind of trickling up. So that was enough for me I ideally wanted to wait for the first 1 minute and take this as a 1 minute opening range breakup and set my stop. It probably would have been the same. My stop would have been below 70.50, but I had enough confirmation that we had a really strong level. We had the price holding above it after, we had a false breakdown. So the price pops back up and it's holding it. That was enough for me. I set my stop just a few cents below 70.50, took it long. And then just as quickly as this move happened from 70.36 all the way down to 68.66, almost just as quickly the price popped up to the pre-market high of 71.25. Typically, and that's my pre-market, my price target here. Typically, I would scale out a bit on the way up there, but it happened so quickly. As soon as I got to my price target, I took it all off. Got a good 50 plus cent move and or almost 50-cent move, and that was good enough, especially considering my risk on the trade. And that was it. I was going to call it a day, but then I noticed this pre-market level, pre-market high level, price broke through that level, came back, tested it, and I saw now the same thing I saw here, except in this case it was more of a squeeze play. Here again, just trading off a level. I saw that the price came back, tested this pre-market high that had just broken and was holding above it. That was enough for me to take it long, set my stop just a few cents below it, and again take it to the next logical resistance level. There's nothing, going back literally years, there's nothing, no price action or no levels to draw. So my thinking was 72 is the next logical level. So I started scaling out right into 72. Still had about a third or a quarter. I think I had about a third of my position left. That came back and I got stopped at a break even. And then I took a third trade on this, which I shouldn't have done, but I'll get to that in a second. So I saw the price was kind of, on the 1 minute chart, you can kind of see like an ascending wedge here. So I traded this based off of that ascending wedge. But really, I shouldn't have taken this trade because, one, my entry was about 70, 74, I think, 70, 73 was my entry. And I have to place my stop at a technical level. In this case, that would be the pre-market high of 71.25. That's a 50-cent risk. Here it is. So that's like a 50-cent risk. Doesn't justify the reward whatsoever, knowing that it could potentially double top at 72. And so I just abandoned the trade. I mean, I should have actually abandoned it sooner, but abandoned this trade with essentially a scratch trade. And I'm glad I did because the stock eventually sold off. And this actually, I think, it's good to point out too, because this third trade was a mistake here, but I think the thing that I did right is when I realized I made a mistake, I didn't let my ego get in the way and want this to work out and just hold on to something that I clearly shouldn't have been in. I just got out of it, even though it was essentially just for break even. And even if it had been for a small loss, that's still the right thing to do. Just if for some reason the trade doesn't make sense, the one thing I always tell myself is just get out of the trade, no matter what happens. That's it. So that's my recap for today. I hope this was helpful and informative, and I hope you are all having a good day. Take care.